have to hit a couple buttons over here to get this thing officially moving. Alan, no prior military airborne for me. My wife, although about 30 years ago, was in the Army for 4 years. So I don't know. Maybe I absorbed some knowledge. Yeah. Anyway, thanks for asking, though. All right, let's get started here. My name is Jim Cagnina with Infinity Futures. And I know I'm going to get a couple of people who didn't get their username and password credentials. So if you didn't, let me know in the question box here, and I will email them to you after the webinar. We're looking at the Live Trading Challenge site. As most of you know, the Live Trading Challenge is brought to you by Infinity Futures. Infinity Futures is basically an online futures trading and brokerage firm located in Chicago, Illinois. We were established in 1995, making us going on 22 years and still kicking. Our primary product is the Infinity AT trading platform alongside the Sierra chart, integrated charting, and it allows people to trade the futures markets from wherever they may be. And for the challenge, we're going to be using the Infinity AT trading platform for the trades that you're going to make. And we'll go through all that in some detail in a second. The other thing I do want to point out, though, for those of you who are familiar with us, we've added a new section to our website called Managed. And in the Managed drop-down menu, you have a couple of options. And these are not self-directed trading programs. In other words, these are managed programs, and the first category is a CTA program, where we actually have a CTA program where a third-party commodity trading advisor, which is registered with the NFA and the CFTC, would trade your account for you. These programs, there's a lot of different CTA programs, and every once in a while we find one we like. In this particular case, we're offering one through Infinity. Alternatively, there's also some systems type of trading available. We've got two. We've got the InvestaQuant system, where trades are automatically placed in your account for you, and you can click on InvestaQuant to investigate that further if that's for you. And then the Savius Auto Trade Network, it's actually a network of a bunch of different systems that you could either follow along live. You don't have to actually take an auto trade, or you could take an auto trade in your account. So keep that in mind as you go through the website. Brand new section as of last, I think, Thursday. So anyway, having said all that, I do want to remind everybody trading futures options on futures involves substantial risk of loss, not suitable for all investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, and although that can be an equation for opportunity, it's also an equation for risk, so be careful. Only fund your futures trading account with risk capital. My personal definition: money I could afford to lose, doesn't change my lifestyle, lengthen my retirement horizon, or overly anger Mrs. Cagnina. Now, I say that last part kind of tongue-in-cheek, but stress is part of life, and the more stressed you are, the harder it is to be successful in trading these markets. So be careful, and if you're not sure where you fit on the risk curve of things, contact your Infinity Futures representative. Everybody here has one, whether you like it or not, whether you're a customer of Infinity's or you're just participating in the Live Trading Challenge, or you're just going through the discovery process of whether trading futures is right for you or investing in futures is right for you. All the customer service reps here have extensive experience in this business. They're NFA members, CFTC registered, and have gone through some pretty rigorous training programs. And equally as important in my mind is they've been not only talking to traders like you guys on a daily basis for many years. We're talking 6:30 in the morning till 4 in the afternoon. But they're also, watching the markets and have some really deep institutional knowledge. So even if you decide not to open an account with Infinity, and we're a low pressure sales shop, reach out if you have questions to help you. Okay, and then lastly, past performance not indicative of future results. I'm not going to show any past performance today. We're going to talk about the challenge. It's kind of cool. It's free. We do them every other month. This one is LTC 334. The first 3 designates the 3rd year that we've been doing it. It is officially starts October 18th. We'll get into the rules right now. Any questions yet for me? My introduction. The introduction's over. The fun part starts. Let's go ahead and take a look at some rules. Everybody's going to be using an Infinity AT trading account. We emailed unique username and passwords Friday and this morning. Those are the credentials you're going to use. So if you have a live account, you're not going to log in with that username and password. If you already have a demo account, you're not going to log in with that username and password. You're going to log in with the live trading challenge username and password that we sent to you recently. And when you do live in, you're going to log in. You're going to log in demo mode. Okay. There's 3 ways you could log in: demo, live, that means you have a funded account, or simulated live, again, funded account. For this particular challenge, for this contest, you're going to log in demo mode with the live trading challenge username and password credentials we sent Friday, and some of you folks received them on Monday. Okay, and if you haven't received them yet, type your name in here. I'll get them out to you. All right. Hang on a second. I'm still broadcasting, right? You guys can still hear me okay? Okay. All right, Paul, when this thing is over, all right, great. When we're done here, and we won't be long, I'll email you those credentials. Okay, so let's go through these. Let's go through these rules. Now you're gonna start with $0. You have a 0 balance account, they're called. So day 1, no trades have been made. You're gonna start with $0. And as you progress, hopefully positively, then your balance will start to accumulate. And as you see in our homepage here, the leaderboard will have the top 7 folks up here with their P&L and where they're from, the country and city they're representing. So it's a 0 balance account. Now every day you have a daily loss limit. That daily loss limit is set as $750. And the whole purpose of the live trading challenge really is to get you used to trading under real life conditions. So we limit the amount of leverage you could have, we limit the amount of contracts you could trade, and we provide real what we feel are realistic loss limits based on the profile of most of our day traders. So maximum daily loss limit. So on any given day, daily means any given day, you could lose up to $750 before you met your loss limit. And it's up to you to police that. However, there's also a liquidating feature in the platform where if you reach that number on a mark-to-market basis, you'll be liquidated. Your positions will be liquidated, and you will be locked out from trading the rest of that session, that day. Okay, so that's a real phenomenon. Now you can get slippage because you get liquidated at market, but we're hoping that you don't rely on the system to liquidate you. That, like in real life, you're responsible for your own internal loss and you have stops in appropriately. Okay. So keep in mind, I get calls all the time. Said, hey, I got, I'm only lost $725. Why am I turned off for the day? Well, when you hit that 750 mark-to-market limit, then the system kicks in, and you're going to get a market order to get you out, and you could have positive or negative slippage. It's the way market orders work. So keep that in mind also. And there's a $5. Well, we'll get to that in a second. Hang on. So that's the daily loss. So any given day, you could lose that much. But if you lose that much in day 1, you can come back in day 2 and continue to trade. And we've had people who have hit that in the middle of any given day in the contest and come back and have done well. So don't let that discourage you. Keep going and try to learn from what went wrong the first day. Maximum loss. Now here's where you actually are kicked out, and you really can't accumulate this level of in a day because the daily loss is 750. But the maximum loss is 2,500. If you hit this loss, then your challenge is over. and it's cumulative. So that's your cumulative loss if it gets to $2,500. Okay. Contract limits, 3-lot maximum. I wonder if I have like a marker on this thing. Hang on a second. I do. Contract limits, 3 lots. Oh, that's not a good marker. Let's get a better one. How do I erase that? Hang on a second. Yeah, I've done a million of these things. You'd think I would know like how to use the the GoToMeeting software. We'll just do the spotlight. 3-lot positions. So a lot is a contract, right? So you can, and I'll go over a lot of examples in a couple minutes, but you can go long or buy 3, or you can go short, sell 3, or you could buy 2 in one market, sell 1 in another market. That would be 3-lot maximum. So you could have open positions equaling 3 contracts in whatever markets that you choose. Okay, and we're going to go through a bunch of examples on that. Now, of course, if you liquidate a position in the middle of the day from a 3-lot to a flat position, then you're able to go ahead and place more trades. You get more than one trade. You can trade as many times as you want. You just can't violate the 3 contract rule. Okay. Flat at the end of the day, that means just that. At the end of the trading session, and most of these markets close at 4 p.m. Chicago time or Central time. We want you to be flat. That means you don't have an open position. Again, this is a day trading challenge. So you're flat at the end of the day. That's another rule. If you hold a position over, then your challenge is over. Minimum trade activity. You must at least make 1 trade per day, per session. There's 5 sessions altogether. Assumed commissions. We're trying to mimic real life conditions. So the more you trade, the more, I'll call them phantom or assumed commissions, you will be charged, since we're trading in a simulated account, not a real account, of $5 round turn. So when you buy 1 and sell 1, it's $5. If you buy 3 and sell 3, it's $15. And we will net that off of your P&L at the end of the day. Okay, again, trying to make it realistic. Let's take a look at the markets that are available to us. Oops. Here they are. I have the ticker symbol up front. I guess it's not really a ticker symbol, contract symbol, whatever you want to call it. And then the description of the actual market itself. And as you can see, we have stock indices. We have a lot of the asset classes actually offered here. Stock index futures. We have energies. We have Forex or foreign exchange. We have interest rates, bonds, 5-year, 10-year notes, and then some grain markets. Those are the markets that you will have access to on your challenge account, and you will be able to trade those. And virtually around the clock. As we know, most of these go around the clock. Grains have a little different trading hours, but pretty much all the rest of them are 5 p.m. in the evening, going all night, all day, all the way to 4 p.m. the next afternoon. Okay? Everyone with me so far? All right. So the other piece of information that's kind of important, let's go back to the upcoming events here. The day of the contest is October 18th. And that is a Wednesday, this Wednesday, as a matter of fact. Today's the 16th, Wednesday is the 18th. However, due to the nature of the way the futures markets works, the trade date of October 18th actually starts the night before. So 5 p.m. Tuesday, the 17th, markets reopen, and they're open all night, all morning, and all day. And that's all counted toward what's called trade date October 18th. So even though the date is the 17th in the evening, that's for trade date October 18th. You could start Tuesday night at 5 p.m. if you like. And trade all night, all morning, all afternoon, as long as you're flat by, first day would be Wednesday night at 4, you're flat. Don't have a position. Now, keep in mind too, though, you could also get a head start, log into with your live trading challenge credentials today and tomorrow and practice. I recommend everybody do that. Those trades will not be counted toward the contest results, so it doesn't matter what your P&L is. But I would get familiar with the trading platform, and I'll show you some tools and some resources available to help you if you're new to the trading platform and the charts. And practice, make sure you could log in and all that stuff today and tomorrow. All right, and then Friday, October 13th. No, I'm sorry. We're up here. October 24th, which is the following Tuesday, the contest is over. That's the fifth day. So you got Wednesday, Thursday, Friday the first week, Monday, Tuesday after the weekend break, and then at the end, it's closed down. Okay. Cost is free, of course. Max participation. I think we have 460 traders registered for this particular challenge, and the traders are from all over the world, which is kind of exciting. And on the leaderboard, you'll see what city and country, who's who. So that's kind of cool. Now, anybody who actually comes in the top 5 will qualify for the third annual Make the Trade Live Trading Challenge annual championships, which are in December. You got to come in the top 5 to qualify. Everybody who's done the regular events over the course of the year and then past winners will get an invitation to participate in that. So that's kind of fun. And I do believe somewhere on here we have some prizes. We have a couple different prizes for first, second, and third place, some commission credits. So if you have a live account or if you open a live account within a certain period of time, you'll be able to get your commissions rebated to you that you ordinarily would be charged when you trade. First place also gets a 90-day access to the Savia's prop trading tool suite, which includes all that stuff. Kind of cool. And then third place is the Rooster Call by Martin Rimes from Hit the Mark Trading. And then you could see second place prizes and third place prizes from there. And then there's some information on the commission credit stuff and how that works. Any questions yet? I'm going to pull up a trading platform in a second. Is anybody brand new to the trading program? I haven't seen the trading ladder yet or anything like that. Let me know. Just pull up a trading ladder. I'm actually going to pull up 2 trading ladders. I'm going to pull in the E-mini S&P on the left-hand side, E-mini S&P stock index futures on the left, and then the mini NASDAQ stock index futures on the right. Tim, hi Tim, good morning. I just talked to you. Thank you for being here. And I'm going to actually put up in a minute, a little bit later, some resources for you to they might be helpful to you because you're new to the platform, and it could be confusing if you haven't traded futures before. But let's talk about the 3-lot max rule. Okay, so I'm going to put a 3-lot trade in. I'm just going to go ahead and put a limit order in. I'm trading on a simulator. It's dark blue, and you'll see I got a limit order 3. I'm working 3 at 51.5 on the mini, and I'm going to move this down because I want to get Phil to show an example. All right, so I'm short 3 right now. This is okay. This is a good. You're fine. You didn't breach your 3-lot loss limit. Okay, but you're not going to be able to put. You can't put another trade on now. Your max allocation is -3. Even if you wanted to, instead of going short 3 contracts, and say you wanted to go long a contract, let me delete that. On the NASDAQ side of things, one would argue, well, this is a spread. It's a little, they offset each other kind of. But no, this is 4 contracts. This would be a rules violation. Don't do this. You got 3 and 1. That's 4. Even though one's long and one's short, it's still problematic. So if you were short 2, I just liquidated one on the E-mini S&P side. If I was short 2 and long 1 in this market, that would be cool. You could do that. Okay, so any combination of open positions is okay as long as they add up to 3 or less. Now you don't have to do 3. You could do 2. You could do 1. You could do whatever, whatever fits the strategy or your trade idea or whatever opportunity that you see at the time. Then you're good. Now let's say that I wanted to flatten this position here, so I've got 0 over here, and I wanted to buy 2 more over here. Now I'm long 3. I could do that. I got 0 and 3. That adds up to 3. This is probably because there's no automatic feature preventing you from doing this, having 8 in there, or 9 in there, or 10 in there. So this is totally self-policed. Now, of course, I check. We have people that check at the end of the day. So if you do it, you'll get caught, which is a bad thing. So try to be vigilant on this particular thing. Okay. P&L. Okay, good question. So at the bottom of the trading dome, you'll see 2 numbers. You'll see the number on the right. Let's start with that. This one here, that's your closed trade P&L. In other words, when you close a trade, whether you sell first, buy second, or buy first, sell second, whatever your P&L is, and this does not include the commissions, this is gross P&L, is here. On the next side is, you see it's moving around. That's your open P&L. In other words, this 5 lot that I have going on right here, that is actually my open trade P&L, and you put them together and you get your total gross P&L. Now I know that the open P&L moves a lot, so it's hard to pinpoint exactly where it is, but you'll get an idea. Okay. Alternatively, on the NASDAQ dome, I've got an open trade P&L that's going against me here, and that's related to this 3 lot I have open. Okay, so that's hopefully that answered your question. Let's go back to normal there. All right. Any questions on contract size, open P&L, and all that stuff? Type them in right now. The trading ladder, is everybody familiar with the trading ladder and how it works? I know Tim's going to do some homework on it. If you have any specific questions related to the actual trading ladder, let me know. Okay, so from a tip point of view, let me say this. I'm gonna give you some tips. Yeah, so here's this. We call this thing. Who asked that question? So Rob asked. You can go to the scoreboard and click the P&L cum at the bottom to see your profit and loss. That's right. So if you want to see, we call this thing the scoreboard. It's a quote board, really. I don't know how the word scoreboard kind of got into the vocabulary for this thing, but people call it the scoreboard. We just got some dings here. We'll see what happened there in a second. If you go on the lower right-hand button here, it says cumulative P&L. You click on that. It'll show you, it'll combine all of your different markets together, and it blinks off. But click on that, and it'll show you, okay, I'm up 92.50, gross profit 92.50. That's another way to see it all combined. This other thing also allows you to open up, I just clicked on that button, that closed book, and this shows all of your trades and all of your trade information. Everything from, where your limit was, what your market was, where you were filled, the time you were filled. Remember, this is Greenwich Mean Time, so 4:20 p.m. That's Greenwich Mean Time. So you got to back it into whatever time zone you're in. If you want to analyze that, time of trade's important. Sometimes there's better times than others to trade. If you want to add different you can configure the columns to add other stuff to your view. And of course, you could save these to a file or save them as a CVS file. Alternatively, here you have an open book window. Now, I don't have any open trades, but if you had an open trade, it would show you what they are here. Okay, so that's a good way to figure out where you're at on any given day. And I like to download them and print them out and look at them. Or better yet, if you really want to get to the crux of the matter, write them down with pencil and paper on a notepad. For me, it really helps me think about what I'm doing and what I've done, and it helps reinforce my my mental memory, my muscle memory for the next time, because I wrote it down, and I'm going to write it down, I'm going to write it down, I'm going to follow it. It's a good trade practice. Most people don't do it, don't take the time to do it, but at a minimum, you could certainly CSV these files, these trades, and do a little post-mortem, or hopefully victory analysis if you do well. Okay, so that's that. Oops, I don't want to do that. I want to minimize it. And you can see both of the positions were closed out of the sim trades I made. So there's no open P&L, 0. 37.50 would be the closed P&L, gross P&L. NASDAQ, no open P&L, and then 55 closed. And that would represent all the trades I made. Okay. Some of the more popular markets where people have traded, certainly these two, E-mini S&P and the mini NASDAQ. Let's take a look at a couple other ones that seem to be popular. Crude oil, CL, light sweet crude. We're actually a little bit of a rollover phenomenon here. We have 109,000 in the December contract, and that's the one I would focus on. In the what did I pull up? Oops, I'm sorry, my bad. I'm losing my mind here. Hang on a second. Crude oil, CL, the November contract I mean to talk about, versus the December contract. Let's pull them up, take a look at them side by side. Now, these are two contract months. As you know, the crude oil market expires every month. So there's what's called a rollover, where people slowly stop trading the front month, start trading the second month until the second month becomes dominant. Then it becomes the front month, and then the old front month goes away, goes off the books. So right now in December, the December contract has about 200, and here, let me show you how to show this. December contract has about 235,000 contracts traded today. And let's just move this up so it's underneath it. We could see a comparison better. This is in November. X is November. And it has about 395,000. So this is going to start transitioning from November to December. Right now, my rule of thumb is whatever market has more volume at any given time is the one you want to trade that day. So I would trade November today. It has more volume. Over the next couple of days, that's going to change. So keep that in mind when you're when you're looking at crude oil. And another way to visualize it is kind of look at the bids and offers. You can see there's more bids and offers on the blue column and in the pink column on the November contract than there is on the December contract. Alternatively, for a 1 or 2 or 3 lot trade, there's plenty of liquidity in volume in either of these 2 months. Should you want to just jump ahead and do the December, that'd be okay too. But I would tend to kind of wait. I wouldn't wait. I would focus on the November today. Tomorrow the story could be different. The next day the story will be even more different, and you'll see volume migrate. Okay, but the crude oil market is one of the markets. It's, in my opinion, it's a supply market. So there's a weekly EIA report. I think it's on Wednesday or Thursday. I can't remember now. Wednesday, which releases inventories, which causes this market to move. So do a little research today and tomorrow and try to figure out and talk to your customer service rep. Are there any reports coming out this week or any economic releases or things that I should keep aware of? I should be aware of that might cause one of the markets that I'm trading to move. Natural gas is another one. It has a weekly report that comes out by the EIA, and it causes that market to move. And I think that one's on a Thursday. Okay. And then interest rates and all that stuff affect some of the other markets. But these two are the two that a lot of the folks who've done well in the challenge have traded. And let me show you another one, two more to consider. You can consider all of them, but I just wanted to, let's pull up a gold contract. And gold is a $10 tick. Oops, what happened there? And that's kind of a popular market too for live trading challenge and beyond. That kind of moves. Oh, I had an auto. That's it. I had my. Be careful with the brackets down here. If that's checked auto, you're going to get a bracket. Be aware. So this is a good market, the gold market. And the last one that I particularly enjoy are the U.S. Treasury bond market, and that would be the symbol ZB. Z as in zebra, B as in boy. And the tick size here is a little different. It's a $31.25 price increment, so it's a little bigger than the other ones. It does have a tendency to move a little bit in the morning pre-market and then right at the market open, but it could move at any time during the day. Interest rate sensitive, flight to quality sensitive, and sometimes moves in tandem with gold. So keep that as an option, and you can see the volume is pretty good. We have bids in the several hundreds, offers in the several hundreds, and it's a liquid, extremely liquid market. Okay, so let's go here to some more questions. Rob asked, yeah, so in previous, we used to have a rule that says you must have a stop in place for every trade that you make. So I'm short right here. I want the market to go down, so my protective stop would be above it, right? So I would click up here to place the protective stop above the market, and that would satisfy the you must have a stop in for every trade. Now, putting a protective stop in, even if it's a catastrophic stop, is just plain good business practice. I mean, it's good trade practice. It's something that you want to do. And we're not going to police it during the event, during this particular challenge, but as you transition to a live environment, if you do, consider that as a good idea. Now, even if you're not really sure exactly where you want to put your stop once you enter, put something in. Like I said, even worst case would be a catastrophic loss. There's some kind of spike in the market because of something, and something you didn't expect or nobody expected to cause an unusual price action. You do want to be protected. As painful as that it could be, it's better than getting your whole account knocked out. So that's a great question, Rob, and I'm a real big advocate of having a stop in when you're trading. Okay, and it's easy to cancel these orders. It's easy to we have a cancel all button here, which literally you click that, it'll cancel anything that's working, whether it's a limit order or a stop. It will cancel it. Whether it's a buy limit, a sell limit, a buy stop, a sell stop, it'll cancel them. And then the flatten button does the same thing, but also liquidates your own position. I call it the panic button. I don't feel that the flatten button. I mean, it is what it is. If you need to just get out, flatten, and reevaluate, it's there for you. The reverse button is exactly that. It reverses your position. So if you're long 2, it'll make you short 2. If you're short 2, it'll make you long 2. I'm not a fan of it. I don't think it helps you. I think it's it's not a good strategy to keep reversing. But if you need to, it's there. Alan asks, could you use the present platform to log in? I'm not sure I understand the question, but your credentials for your live trading challenge, yeah, this is the platform you're going to download, which is in your instructions that you received with your username and password, and you'll be able to log in demo mode, and you will be able to trade. You could practice today and tomorrow. That P&L will not be used against you for the start Tuesday night or Wednesday morning. And Paul asked, do I prefer simple brackets to trailing stops? Well, I would prefer simple brackets, but your preference is up to you. And what's a simple bracket? Well, let me give you. Let's just take this bond trade here. Simple bracket here would be where I'd set my profit target. Let's just make something up. Don't do this at home in a live account. And then I would send the bracket. So what a simple bracket is it automatically puts a profit target 6 ticks from my entry. It put my stop loss 6 ticks from my entry, and I define those, user defined. And the trade has got all the components of a typical trade. I got a position, I have a stop, I have a target, and which the luxury of the bracket is whatever leg gets filled first, the other leg will automatically cancel. It's called an OCO, or order cancels order. Okay. Now you could create the same trade without making it a bracket. In other words, without making it automated. And what you would do is you would simply pick your profit target and you put your stop in. And as you watch the trade meticulate, I'm not sure if that's the right word, but it sounds like it might be, then you can automatically cancel whatever leg of the trade did not get filled manually. So if the profit got hit, you'd right click and it would delete the stop, you'd be flat, everything would be good. The bracket just gives you an automated mechanism to do that. Andre, we went over this a long time ago, but all the rules are on the website with regard to that. All right, Venny, excellent, you got that, cool. Yeah, so Reg asked the question I've been talking about, are you able to share what contracts past winners traded? If so, what are they? They're bonds, crude oil, gold, and one of the stock indices, either mini S&P or mini NASDAQ. They both have a similar average true range. And one of them just moves a little bit differently. Remember, NASDAQ are tech stocks, right? Whereas the S&P are large cap stocks. So even though they're highly correlated, they're not 100% correlated. And particularly as we go into earnings seasons, the NASDAQ 100 is only influenced by 100 different components, whereas the S&P 500 is influenced by 500 components. So if you have something out of whack in the NASDAQ 100, it might move a little bit more. And earnings sometimes are actually announced after trade hours in New York. So again, one of the benefits of trading futures is, hey, you can get in there at night. You can get there at 5 p.m. in the afternoon and take advantage of an opportunity that a regular ETF person or stock trader might not be able to take as readily. So keep that in mind. That's one of the big advantages of trading futures. And one of the things that I like to talk about. Sam, no worries. Thanks for being here. Rob, I'm not sure. I'm going to ask this question. I'm going to read the question, but is it possible to pull up a DOM by clicking your quote board when you click to change charts? of that chart. So you don't have 5, 10 domes up at the same time. I don't know why I just said I hate it when I say The answer is no. I mean, you've launching the chart, you're going to do them from the scoreboard or the quote board, and you're going to click on that little down arrow next to the next to the symbol, and that will launch the actual trading ladder. You know, and then you can minimize it, and it's down here at the bottom, and I know you can't really see which one's which when you do that. So I always like to have the I have a multi-monitor setup, so it's easier for me. And by the way, I'll talk about that in a minute. So I have it on another monitor, and I could just launch whatever I want or close whatever I want from there. But that's the only way you would do it. When I mentioned multi-monitor layout, and let me just talk about this for a second. You know, when you're trading, you know, speculative leverage markets, there's a lot of things you cannot control. You can't control where the price is going. You can't control outside events that affect the price. You can't control your internet speed. Well, you could to a small degree, but not really. I mean, your Comcast service provider goes down, you lose, you know, you're not getting data and you can't execute a trade. However, well, on that note, the good news is you can through Infinity, because you're just going to call up your customer service rep and say, hey, Marcus, lost my internet connection, or I had to reboot my computer, or the cat jumped on the keyboard, whatever the reason, could you make me flat, or could you add a contract, or could you tell me what my position is while I'm getting back on my feet? So that's one of the, and it's not, there's no extra charge for that. That's one of the benefits of having one of our guys or gals help you with when you get into that kind of thing. But you can't control a lot of things. But one of the things you can control is your trading workstation. You could control the type of processor you have. You can control how many monitors you have. You can control you know what you do on that particular dedicated workstation. And you know, maybe you don't want to be playing having your kids play video games on it, or having a whole bunch of stuff eating up resources, or in slowing down your system. And so what I'm trying to say is it's a better idea to have a standalone trading workstation. Maybe you spend $100 or $2 more at Best Buy to get a little better machine, a little better processor, extra monitor, and then you're not going to have these kind of things, because a lot of people like to have multi-monitors to see a bunch of different markets at the same time, and to see, you know, your quotes, your news, whatever information that you want to share or that you want to use to analyze. Maybe a Skype, maybe an instant messenger, maybe you're communicating with other traders throughout the day. Not always a bad idea. Maybe you're communicating with your broker. So the thing you could control is your hardware, and then hopefully, you know, maybe, you know, depending on your internet service provider, maybe you can control that too, to some extent. So the long answer to the question about, you know, how do you launch the dome, that's how you launch it. But having two monitors really helps. And you've seen some folks with more than two, 3 and 4. You could kind of get a little crazy with it, but you could do it. All right, Arthur asks, if you can take a screenshot of your multi-screens and post it in the webinar, question mark. It would be great to see how to have it set up for trading, or at least describe what's on each monitor and why. I'm not sure I understand the question, but here's a picture. So this chart book would be on one of my trading screens. Okay, and you know, you could set the charts up however you like. You have the ability to set up more than one chart book. So now right now I have 3 chart books up. I have a trends chart book, which gives me daily charts of the markets I'm interested in, right? So, the first thing I do, the very first thing I do is, try to figure out what the state of the market is. Is the market in a bull market? Is it in a bear market? Or is it in a sideways market? There's only three options in my world and the way I look at things. And if it's in a bull market, depending on the strength of the bull market, I'm going to look for opportunities to buy. If it's in a bear market, I'm going to look for opportunities to sell. And if it's in a sideways market or neutral market, then we got to go into other tactics to figure out what to do. So that's kind of number one. So I have a trends thing here, and I have all the different markets up here, and some of these things I got a lot of them. So I'm doing some trade management here with some screen management, crude oil, gold, bonds, and ES. Okay, but if I wanted to look at the Euro FX as an example, then people do trade the Euro FX in the live trading challenge. It's the Euro currency versus the US dollar, and you've got some stuff going on with Brexit and other things in Europe, elections and stuff like that affect this market. It's a two-sided market, right? It's the US dollar, it's the Euro FX versus the US dollar. So there's two sides to the relationship between these two instruments that causes this market to move. So it's a good market to look at, and it's a market that actually at 1 o'clock in the morning Chicago time, when London opens up or Frankfurt opens up, and I'm estimating the hours. I don't know exactly if it's 1 or 2. It depends on where you're at. But there's trade opportunities, and there's trade ideas, and there's things going on. So that's one of the benefits of a market like this. I know I'm going all over the map. I apologize. But as I think of things, I'll say them out loud. So that's how I have my particular trend stuff set up. So it's called a work. It's called a work. It's a workbook. So it's a chart book. So you can see in the menu we say new chart book, open chart book, close all chart books. You could open up a chart book. You could create and save a chart book. And once you have a chart book open, then at the bottom you can see all these tabs. These are all the different charts associated with that particular chart book. So I have a whole bunch of charts underneath it. Another strategy is to have just one market you're looking at and a whole bunch of different views. So I have a 15-minute chart, I have a weekly chart, I have a market profile, I have another market profile, and I have a day chart. So now I get a snapshot of what's going on different time frames and different analysis techniques. And let's just take a look at a market profile, because someone asked me what's my favorite analysis technique, and it's not an indicator. It partially has to do with market profile. And I know this looks kind of funny if you haven't seen it before, but this gives you an indication of what I like to call price happiness, Paul. And you see a bunch of information on one of these daily market profile charts, and it just charts the time frame in which every 30 minutes it just charts which prices actually traded in that 30-minute period, and then plots these little bricks around it. And what you tend to get, let's take a typical one here. You tend to get, let's take this middle one here, Gaussian distribution, or a bell-shaped curve that is, which could be pretty typical on a non-trend day. So you have what's called the point of control, and that's the price or prices where trades have occurred throughout more of the time frames throughout the day than anywhere else, and that's equilibrium. That's price happiness in my point of view. That day on October 13th, the market favored this price over all others throughout the whole day. And the market tend to gravitate toward that, whether it was trading up here in the blue area or down here in that blue area. It tended to gravitate back to this point of control, it's called. The gray bars are one standard deviation worth of Gaussian distribution, and then the blue above here are prices above that level. And then in the blue below it, prices below value. Prices below value, prices above value. And this is the value area, the gray area, the standard deviation, and then the point of control is the middle. So this is a pretty classic look of market profile. You get these for free with our charts, by the way, if you're a customer. And we do whole courses on this thing. Now, today's distribution looks a little more funky, and as the day goes on, it will fill out. It will fill out more completely. And one trade idea or trade strategy is, hey, as the market, if the market approaches the event horizon, I'll call it, between the value area and prices below value, then maybe we can. There's two ways to look at it. Maybe we want to consider going along with the expectation that this market's going to eventually be attracted to the point of control up here at 52.15, and then we know where to put our stop at prices, way down here below, at the bottom of prices below value, because it could break down. We don't know. Alternatively, another strategy is if the market gets down to trade on a relatively frequent basis on prices below value, then maybe we do want to go short and put our stop back up in the value area. So two different, mindsets. But then again, I would look at, is this market trending or not? And if it's trending, we want to go with the trend. It's my personal preference. So that's the long-winded answer. We have a couple of market profile videos on our YouTube channel. Let me just show you that real fast. We'll get back to these charts in a second. Infinity Futures YouTube channel, you can access it from our homepage at infinityfutures.com, and you could search, for video. We have all sorts of videos on here. It'll drive you crazy. Here's a few keyword market profile videos we've done over the years. Alternatively, we have playlists. How to use the trading ladder, how to use the charts. Whoa, sorry about that. That's autoplay. Let's be quiet, Jim. So feel free to, especially for Tim, and when you get some time today, go through this thing. It will really give you some good tips. All right, Arthur, I got it. I'll get those to you. All right, what I missed? Did I miss anyone's questions? Anyone have any questions? Pop them in here right now. It's really hard for me to. We have when you add GoToMeeting, I talked about having a lot of trading screens. We have GoToMeeting gives you all these different windows you got to pop up here when you do a webinar, including a question box and a like a little control panel. So I got to find the windows. Andreas, what about the drawdowns? We'll go over that one more time briefly. We've already went over this, I know, but let's talk about this really fast. If you go to events and rules, it's a $750 daily loss. That doesn't mean you're kicked out of the competition, but if you hit your daily loss of $750 at any given day, your day is over. Alternatively, and that's mark-to-market loss. If you don't get out before that number, you may be auto-liquidated with our auto-liquidator, and you could have slippage. So you cannot rely on the auto-liquidation feature of the AT platform to ensure that you don't go past that 750. You could only rely on yourself for that. Thank you, Rob. Maximum daily loss is 2,500. You hit that number at any point during the event, then your challenge is over. Okay, so Andre has a good question. The 750 loss is real time. It doesn't matter what your P&L would have been at the end of the day. You hit minus 750 in the middle of the day, then you're done. Does that make sense? You can't dip below that and continue to go. All right, I think we got it. Andre, you can't go below 750. If you don't get yourself out, then the system's going to get you out. Just like in a live account. You have a loss set, whatever it is. And again, this 750, this is a relatively random amount. It's not random because we try to scientifically associate that with a 3-lot max. But for a live account, you might have different trade parameters. You might have, you might be able to do 10 lots at a time, and you might have, $20,000 in your account, and your loss limit wouldn't be 750. It would be something different. So this number is strictly a parameter associated with this particular event. All right, awesome. All right, the 3-lot rule. Let me go over this again. Very important. We get more people that get kicked out because of this than anything else. 3-lot contract max at any given time. If these were the only trades I've had on, I'm long in gold here. 1 lot plus 1, you can see on the left-hand side of the trading ladder. Short on bonds, minus 1. I have a total of 2 lots, 2 contracts on. I'm well within my 3-lot allocation permissions. Everything is good. Let's say I sell another one. Now I'm short 2, long 1, 3 lots. It's all cool. Let's say I buy one. Long 2, short 2. That's too many. That would result in the challenge being over for you. So stick within the 3-lot max, and you'll be okay. All right? All right, I think we've covered a lot of ground. Let me just do a couple of other housekeeping things to make sure you get. We already talked about the managed programs. Coming up here on the webinar front, we have, and by the way, if you're new to Infinity Futures, keep in mind, this is a really good resource. And feel free to visit it frequently. The webinar, we have videos, we have about futures, we have CME research section, we have webinar section, and a newsletter section. The webinars give you most of these webinars are done by third-party people, but not all of them. Sometimes I do them, sometimes Patrick Zielbauer does them, sometimes one of the other guys or gals in the office do them. And the idea is to provide you with an hour worth of free how-to information. Now, some of the third-party people we try to find third-party people that have a point of view in the market that's unique and have an analysis technique that's unique, and they share with us what they do. So Jonathan Rose is a good example of I think that's Thursday at 3:30, and he's going to do. He's a bond trader guy, so he's going to talk about trading bonds and bond futures, and he'll probably get into notes as well. And so that's a nice thing to sign up for, to listen to if you have time. And if you miss it, it'll be on the YouTube channel later on, recorded in a recorded format. If you go live, you could ask him questions, and he's pretty good about answering them. Patrick Zielbauer, who is with Infinity here, is going to begin doing what he calls a fortnightly. I had to look that up. I wasn't sure what fortnightly meant. Client address. And he's probably the best charting technician that we have, that I've stumbled across, that anybody has, and provides some really good information about best practices and how to really get bang out of the buck for the charts, which, by the way, for most traders at Infinity are free. It's only not free is if you don't do 10 round turns in a 30-day period, then you're charged $19.95. Again, that's pretty small amount of money for what you get with the charts. They're pretty powerful. And then, you know, once an event is done, we usually, you know, archive them on our YouTube channel. You can go look at those. So this is kind of a cool thing. If you want us to email you this, just sign up for the newsletter. We'll email you this every Saturday, and you'll have the list in your email with links to get to them. It's up to you. And then videos, what does this do? Okay, here's some shortcuts to some videos, some playlists for videos. There's shortcuts, really, that is what that is. An about section, I'm still working on this about section, so it'll be a lot better. Here's our contract specs for all the contracts that you could trade with trading hours, which actually might be important. As you can see, they're almost all 5 to 4. You have some exceptions with the grains down here, where the hours are a little bit different, but then energies kick back to 5 to 4 again, 5 at night to 4 in the afternoon, 23 hours. So there's some good information on that page also. And then lastly, CME research section is kind of a fun area where you get a lot of different videos from the CME group. This is CME content. This is not Infinity Futures content, but it's pretty good stuff. So feel free to play around in that particular area of the website as well. We're going to have these contests every other month. The exception is in December because we have the annual championships, which you have to qualify to participate in by either having come in top 5 this contest or in a previous contest. So the next regular one I think will be in February, maybe January or February. It's not scheduled yet. But time flies, straight is an arrow, fruit flies like a banana. So that it'll be upon us twice. If you know who originally made that joke famous, type it in. Give you an extra $10 off your commission. Anyway, any other questions? All right. Everybody remember, trading futures options on futures involves substantial risk of loss, not suitable for all investors, and past performance not indicative of future results. I wish you the best of luck. Please take advantage of the customer service reps here. Email, Skype, phone. They know their stuff. They could probably save you a lot of time in doing things, figuring stuff out on your own. They're mostly good people, as far as I could tell. I'm with them all day. Seem like they're all right. That's all I got. If you don't, I will send everybody their criteria, username, and passwords that have asked today. And good luck to you starting Tuesday night or Wednesday morning. Take care, everybody.